As a result of increased demand for safe haven assets prompted by escalating geopolitical tensions, gold gained favorable momentum early in the week. As expectations of a dovish posture from the Federal Reserve, Fed, contributed to a decline in U.S. Treasury bond yields, gold USD maintained its ascent and snapped a 2-week losing streak. The economic calendar for the following week does not feature any noteworthy data releases that can potentially impact the pair's movement significantly. As a result, market participants will diligently observe statements made by Federal Reserve officials, bond market developments, and geopolitical occurrences. The 14-day Relative Strength Index, RSI, moved above the 50 line, while the recent price is trading above 20 and 50-day simple moving average levels. The ongoing geopolitical tension, with a rebound in Treasury yields, was the main reason for the price increase in this pair. As the monthly candle moved with an immediate rebound with a 1,000 pips upside movement, we may expect a bullish trend continuation for the coming week. A bullish daily candle above the 1960 level would primarily validate the bullish pressure, targeting the 2000 area. On the bearish side, any strong downside pressure with a stable market below the 1900 level would indicate the seller's presence in the market. In that case, the downside momentum could continue toward the 1875 support level before reaching the 1850 area.